Deutsche Bank getting bullish on Eli Lilly, lifting their price target on the stock by $300 to a total of $1,025 a share. This comes alongside a rating boost from a hold to buy. Deutsche Bank noting the high growth outlook for Eli Lilly in the call. So here with more, we've got the analyst, James Shin, joining us. James, thanks so much for being here. So explain to me, talk to me about the biggest driver behind your call here.
Good morning. Thanks for having me on. The biggest driver is just improved visibility. They had outsized expectations and they beat them. And surprises such as ex-US strength for Mounjaro, the coming out of FDA shortage, and then our analysis into injector data for Lilly shows that they've already met their benchmark goals of meeting 1.5 times sellable doses. And this is a great backdrop, right? Demand outstripping supply, you're selling everything you got. It's just a good story. And the growth, like you said, is outsized.
So James, what do you think that supply picture looks like? And I bring that up because clearly they are taking steps in order to better address the supply issues that they have had, seeing it or expecting it to improve here in the second half of the year. How confident are you that they could quickly get these new operations online? And also eventually, what does that timeline look like? Are they ever going to be able to meet that demand?
So, the CEO on media saying that supply is going to improve, and it did. And it has. The FDA website shows that all the doses are available. But and Lilly has cautioned that, look, you can't walk into your pharmacy and get anything off the shelf right now. It's just they're bridging towards meeting real-time demand. It's still taking some time. It's like an Olympic track race, right? Them and Novo are trying to meet this demand as fast as they can. They're building new facilities. They're putting billions of dollars into the ground. So it is improving. And like I said earlier, we've looked into the injector data. It looks like they've already met in our view, their sellable doses goal of a 1.5 times increase versus last year. So I think they're in a good position to meet demand in the second half. And guidance also implies acceleration in the back half. So we feel pretty good.
James, how are you thinking about any potential policy changes to come with the upcoming November election and how that could impact? I know you cover a lot of stocks within the healthcare space, but specifically Eli Lilly.
So Eli Lilly, as it relates to the election, it's tough to say. I think more people will be looking towards the PBMs and so forth for the election. I think there's a bigger correlation there than there's to pharma. Look, anything that's on pricing is obviously a negative headwind, but we already have Inflation Reduction Act. Whether that gets reversed or not, who knows? I think both sides, whether you're red or green, had some issues with how medicine is done in the U.S., but we'll see. That's a TBD.
James, how are you looking at competition? And is there one drug or one, I guess in pill form or whatever it is, that you view as the biggest threat here to Eli Lilly at this point?
So yes, competition is indeed coming, right? This is a big market, lots of opportunity to go get in after. In my view, I think an oral that is non-peptide based, and the one that comes to mind as of late that's making headlines, I think, is Roche. Roche has a product called CT996. Roche is covered by my colleague Emmanuel. They'll be presenting data at a medical conference coming up, so all eyes on that.
And what is it specifically about Roche? And the reason I ask is to kind of broaden it out because I think a lot about the kind of direct-to-consumer brands that are selling weight loss drugs that are compounded, that they are not coming from an FDA, they're not FDA approved, but they're coming from an FDA approved pharmacy, for example. How do you think about competition in that context?
So the compounders are enabled, I think they get leeway, right? Because there's a shortage from the branded products. So as that improves, that leeway starts entering into a gray legal banner. But to your point, having these orals and so forth come to market, they don't have the manufacturing constraints, especially if they're non-peptide. So it'll help to better serve demand. So eventually this, I think the compounding business, we'll have to see. Compounding isn't bad, right? It serves a purpose, right? They're trying to address patients that have specific needs that can't take a specific formulation. So it's really hard to say.
All right, James Shin, great to have you. Thanks so much for your insight here this morning, analyst with Deutsche Bank. We appreciate it.
Thank you.